Now, Wednesday's Federal Reserve meeting will also be a meeting where the Fed outline their dot plot on rate projections. You can see their last dot plot has still projections for further rate hikes this year. So the forward guidance this Wednesday from the dot plot is going to be crucial in determining the Fed's intended rate path. Inflation expectations are falling, but the US economy is still strong. We have seen some strong data points out of the US over the month of September. So there still could be room for one more rate hike this year and a higher rates for longer message. Short-term interest rate markets, however, expect no change from the Federal Reserve for Wednesday's meeting, and they don't expect any further rate hikes this year, with rate cuts of around 100 basis points for 2024. Now, the best situation for gold would be if the Federal Reserve indicate they can stop hiking interest rates and if they started to express concerns about the prospects of US economic growth and lag effects. If the Fed did this, you would expect the dollar to fall, yields to fall, and gold to move higher. However, it is unlikely that they give such a clear message as this. However, it is well worth being aware of a seasonal pattern for gold out of the Federal Reserve meeting. Using Seasonax event feature, we can see that on Fed meetings over the last 15 years, in the 15 days after the Federal Reserve meeting, gold has a bias for gains. We can see that the average return has been 0.42%, 55% plus winning trade percentage, and the maximum gain has been just under 14%. So, with inflation expectations falling, will this be enough to decrease the Fed hiking expectations and lift gold in the days after the Federal Reserve meeting? Major trade risks. The major trade risk here, of course, and it is a significant risk, that the Fed do indeed signal a higher for longer message. Remember, don't just trade it, Seasonax it.